At Insightful Value, we look at companies that the market might be underestimating, and today's spotlight is on Symrise. The stock has taken a hit, but is that weakness a signal of opportunity or a red flag? This review is for informational and educational purposes only, not financial advice. Don't forget to subscribe, like the video, and share your thoughts in the comments. Symrise is a German-based global supplier of flavors, fragrances, and nutrition ingredients. Its products are everywhere, from perfumes and cosmetics to food, beverages, and even pet nutrition. The company has a diversified customer base and operates in over 100 countries, giving it a broad global reach. Financially, Symrise has shown steady revenue growth over the years, supported by strong demand in both consumer goods and nutrition markets. However, in recent quarters, margins have been under pressure due to higher raw material costs, supply chain disruptions, and weaker consumer spending in some categories. These factors, combined with investor concerns over valuation, have pushed the stock down since 2022. On the dividend side, Symrise has a history of consistent payouts, though the yield is modest compared to higher income stocks. Dividend growth has been gradual, reflecting the company's focus on reinvestment and expansion rather than maximizing short-term payouts. Why consider investing now? Symrise operates in essential industries with long-term demand for flavors and fragrances, making it relatively resilient. If raw material costs normalize and consumer spending stabilizes, profitability could recover, providing room for stock price improvement. Why be cautious? The stock still trades at a premium compared to some peers, leaving less margin of safety if growth slows further. Additionally, reliance on global supply chains exposes the company to cost volatility and geopolitical risks. Can the stock recover soon? Much depends on how quickly input costs ease and demand in consumer markets rebounds. For long-term investors who value global diversification and exposure to consumer essentials, Symrise remains an interesting case, but near-term risks should not be ignored. At Insightful Value, we break down companies like Symrise to help you see beyond the headlines. For more details about this and other undervalued opportunities, visit insightfulvalue.com. And don't forget to subscribe to our channel for more deep dives.